So we are looking at how to trade from a position of strength and what that means, yeah. And also, I'm mindful that it's part of the development of your own trading, and the more experience you get, is it needs to you need to consolidate. You need to center yourself in positions, and one of those is understanding a position of strength. You want to trade from a position of strength. And as a counter to that, what's not a position of strength is chasing the trade. If you find yourself chasing the trade, then that's not trading from a position of strength. Even at a psychological level, if you get an example is if you get stop lossed out, and you get thrown a little bit, and then you jump back in and you get stop lossed out again, and like you're jumping in and out of trades and you're getting stop lossed, or you find it's not going your way, is again you end up chasing the trade rather than trading from a position of strength. Let me pull out. So that's the conversation I want to have today, and partly is because I've noticed a couple of people are getting knocked out of their stop losses lately. I've seen it a few times on the Discord. Yeah. So
yeah, I'm getting my butt kicked.
Yeah, it's a part of the learning cycle. Part of the learning cycle. So
don't tell my wife, though, Roy.
No, I won't. I know. I know that feeling. You counter it by being transparent about other things.
Yeah, no, I just let her buy some, well, didn't let her. I don't run anything, but she went and bought some decor for the house, and I just exclaimed at how wonderful it was.
Very good.
So I'm rubbing that, I'm massaging that relationship.
That's right, yeah. Now remember, honey, you spend some money.
Yeah, exactly.
The non-verbal is, we all spent some money this week, honey.
You guys are maybe some more than others. Maybe some more than others, but yeah.
Yeah, let's compare bills, honey.
I think we all can relate.
Absolutely. So within that then is getting clearer. Like you're learning all this. My first conversation I was thinking about talking today was about how to deal with overload. Because you're learning so much. You learn all these indicators. When you start stacking all the indicators together, and then you're following price action, you can get overload very easily. And I think it's a very healthy overload where you're just so much information coming in and you're trying to hold it all. And you'll notice that you can hold it all, and then you get this tipping point where it's just like, okay, it's too much now, and you start to lose your focus or your concentration, and you got to go back and double check an indicator, because what did that indicator say again? And it's not necessarily that you forget. It's just how many balls can you juggle at the same time? How many indicators and the information they're giving you can you hold at any one time? So that was the conversation I was going to have tonight. And then as I was thinking it through, I said, is when that begins to happen, that's where you can sort of try to hold all that and then try to trade and use your trading strategy. Is we get over eager, or sometimes we get overconfident, or another thing is that what worked for you on one phase of the trade won't work for you on another phase, but you try it anyway. So, and what I mean by that is that this is a downtrend. There's different phases within the downtrend, and then we're at the bottom of the downtrend where the swings are more varied. They're sideways, but the swings are up and down. So we were going in that swing up and down where you could swing trade, and we got a couple of weeks out of that. But now volatility in the last few days has come back into the market. So now the indicators and our measurements have to facilitate that. And that's why I think people are getting knocked out of their stop losses. Because now, what's the new thing that's been added in the last couple of days is volume. So now the volume is changing the swing. It's not staying in the same swing space. And I think that's where people are getting knocked out. So look at that drop down recently would have knocked some people out. Now the pump up is knocking other people out. That's new because of the volume. And I think that's why people are getting knocked out. But equally,
is that going to affect your long-term trade that with XRP?
well, it depends on how high it goes. No, because the position I'm in it's already peaked at its Elliott wave, and then it's going to head back down. So I believe this is the last opportunity within the downtrend for me to take profit. So when this comes to its correction down now, this is the time where I'll be looking to take proper profit, maybe all of it, depending on how far it goes down. Because I'm getting mixed indicators with regards. It's definitely going to go below 69, because on the Elliott wave 69 was 3, we're peaking out at 4, now we're heading for 5. So on the way down. So it's definitely going to break 69. The question is how far below 69? I can see it going all the way down to 60. But then again, so there's other indications that I can see it'll just go a couple of points below 69. So I'm
So
go on.
do you pull out profits and then you don't reinvest that, right? When you take your profits out, you keep your profits, right?
Oh no, there's a great opportunity to again on this trade. I'm focused on a particular aspect of the trading where it would have been very good for me when it hit 70 to take out profit, and then when it came back up, dollar cost on the way down again. I didn't do that this time because I've done that before, and what's happened is it changed again. Position of strength. It pulls my entry point down, and then if I want to stay in the trade and the trade starts going back up, I go into the red. So I've got caught with that before. So I said I'm in a position here. I'm going to hold it and not let myself go back into the red, and I want to wait for that final push, and then when it's the final push, go and start dollar costing in on the final push. Does that make sense?
Yes. Yeah.
So I'm now I've already dollar costed in earlier, and it put me in the red a little bit, and then it went down. So now I'm in a very good position. I'm not willing to dollar cost in unless the next time it goes down, I'm coming out of this trade. So that's what I was waiting for. So I think this.
Got it.
Yeah,
I got it. Very good. Very good.
Yeah. Did you get? So now again, look, I'm looking to hold my position of strength. I'm waiting for my time when I go, okay, now this time down, this is regardless of where it goes, I'm finishing this trade. I'm coming out. So I don't mind dollar cost, taking some profit, and then dollar costing in as it goes down further, because I'm out regardless of what happens. So yeah, so there you go. So that's it. So I've had the patience of a saint the last number of weeks in the sense of sticking this out, But that's where I am, yeah. But let's have a look at it in a more general term first, yeah. So I'm going to share a page, and we'll just look at this just as our visual cue, yeah. Share screen. Oh, there we go. Yeah, so I thought this price action would probably go up to 77, 78. I could see it hitting the 81.50. I have a green channel there. I didn't think it would get that far, but the fecker did. I went right on. I'll actually show you. I didn't think it was going to go back all the way to the green channel. All the way to the green channel. And that spike up to 81. Where is it here? There you go. That's that recent spike all the way to 81 went right up and hit that green channel. I thought when we had broken it here and dropped, I thought, okay, we're on our way and we won't be going back there again. And weeks later, I'm going to zoom out. Zoom out is you can see the green channel. This is the dominant channel, downtrend, bear trend channel on this whole arc here, yeah. So here it dropped back into. I thought, okay, here it is, down it goes, and we end up back touching it today, which I think is actually a really good thing, because now we're going to get the rejection from it, yeah. What you can see is the push up is still going at the moment, yeah. Now what that's doing is that's pulling all the moving averages up, because look at how much they consolidated here. It wasn't able to break it. Look at the bears pushed down, got rejected. So now what happens is that you get this rebound up here. Is it pulls all the moving averages up. It shakes out this place. This knocks out all the longs that people are going, oh, this is going to go up. This knocked all them out. Now this here, all the shorts that people were piling in on, this is knocking out all the shorts. You know, so that's why people are getting knocked out, because this is knocking out the longs, this is knocking out the shorts. It leaves the space open for one final push down, yeah. So where here, look, you can swing trade and it's all working well. What you were doing was working for you here. All of a sudden what you were doing wasn't working for you. Oh shit, now it's not working for me all the way up, and you get caught in that. So that's partly
100%.
Yeah, that's partly what's happening. So and volume is the thing. When volume comes in, look, it switches. You sort of got to switch gears with it, you know. So that's where time in the market is. You can't beat it. You can't beat time in the market, because the environment has changed. We're now walking up a temporary hill, so to speak, you know, and there's more energy to it. So excuse me. So that's it. So now look at the green channel here. Like this green channel is, again, it goes from here to here. It's really big, you know. Is it going to come all the way back down to this bottom here? Absolutely not. It could. No, again, I have targets for it down here. 40, 38, 40 is, but I don't think it's going to come there at all. I think, if anything, here we go. I think if anything is
probably to 69 or 68, maybe.
Yeah, well, here's the midline. Here's the center of the channel. When you look at the two green channels, here's this green line is the center of it, yeah. So now when you look at this here, if it was going to come down, is it'll break through all these. Here's the gray channel that it was in. See this gray channel here? It's moving down on this. There's a, I know I'm showing you a lot, and I know there's lines, but here's this red channel that is going on here as well, the red channel. So my point is that it breaks down, it comes back in to the red and the gray channel, yeah. Is if it goes to the bottom of the red channel, there it is, a 62.45. And again, here's a center line that would support that. Here's a support line back from back in the past, the long one. So hitting this white line, here's the red channel, here's a center line, here's the green the green channel of the center of the green channel. I know I'm saying a lot, but again, you can see the confluence around here of all the lines.
Actually, we've gotten to learn your lines. So
okay, very good, very good.
Each time you show us, we get a little bit more out of it.
A little bit more, yeah. So you can see anything from 62.45 to 59. It's definitely within this range. It's definitely within this range. There's also a 55 there, just with all the trend lines coming to it. Equally, the gray channel is there. Like if you look at this, if you look at how exact it was following this. Like every time, boom, it broke it here. Okay, is this a breakout? Well, it's after hitting the green and getting rejected. It looks like it wants to come up and test the fucking green again, but we'll see what happens. Excuse me. It may want to actually see this white line here is all the way back at 1675. Is look at this white line here. Look at this white line here. Look at the support here. Look at the support here. Is it broke the green and it got rejected? Is if it wanted to come up and break the green again, is it could come up to 82.35 and hit this white line. And again, that could be a rejection point where it gets rejected from this, and then it's coming down. And again, if it hits this line, again it can come down, because again, hit this line, come down onto that line, which again is 62.63. You know, so you can see that there. There it's actually moving there. Look at that fecker. Okay, I flicked to another page because it's not as close as I thought it was. Where is it? There we go. So yeah, so that's it playing out. So yeah, so this will eventually break. This will eventually break. Here's my MA chart, yeah. So just having a quick look. I'm going to look at this again. Look at this on the 10 minutes going for a push up. Let's just go and look at the daily for a sec. So the daily it came up and it hit the 20 EMA. This white line, 20 EMA, got spiked, got rejected, yeah. There's the green line again. There it is there. It's not touching it on this one, but you know, when you move through the different timelines, these lines move a little bit sometimes. So if we went down to the 4 hour, you'd probably see the wick touching the green line, but on the daily it isn't so exact, yeah. So if this wanted to break this and go a little further, there's the 82.55, there's the 20 MA, and the 20 MA is coming down like a hammer. So if I wanted to break this and push a little bit more, it's near the end of the day, it'd be doing well to get up here, but absolutely will not be getting past it. And this also could be a very nice strong rejection down, yeah. And again, the higher it goes, the further it falls. So if it went up here, I definitely will be putting my target back to 60. 60. At the moment, I think I have it at 60, 63. But I would definitely be looking at 60 again. So now I'm not forgetting my talk about position of strength. Look, see there, look, it's on the 12 hour, and there's the wick touching the green line. But on the daily, it didn't do it so much. Yeah, if it wicked up here, there's 82, 81, and there's the 55 EMA. I don't think it is. I don't think it's going to break. I don't think it's going to break the recent high, because it is an absolute clear Elliott wave, and it looks like a very nice Elliott wave, and it just looks very. It just looks like the perfect Elliott wave with regards form and shape and pattern and position. So. And the fibs fitted as well. The 272 fits it really well. So I'd be surprised if it breaks it. But you know, this is the drama of it's 9:30 over here. 12 o'clock is the turn. This is the drama just being playing out at the peak. Yeah. So okay, so that's there's a 50 on the 8 hour. There's the 55 EMA on the 50, the green one. So again, the 50 rejected this last time. Here it is again. Excuse me. So let's go to the flick through the 6 hour. There's the 140 weighted 144 again at 82.66. If it wanted to go that far, I don't think it will. There's a 144 and 100. This has been a solid on the 4 hour. This has been excellent for push down, for rejection all along. So here it is, strong rejection. Looks like it could be coming up to touch it again. This would be the 1-2. So here's the Elliott wave, and then the new wave down, the reverse Elliott wave down, the ABC correction is also an Elliott wave. So 1, 2, and then push down. So it naturally is, it can go really close to the peak but not break it. And that's when you know that it's a 1-2. If it doesn't break it, it's the 1-2. And it gets a bit hairy when it gets closer to it. You're like, Jesus, it's going to go again. You know, then you got to look at, well, what's around here? What rejected it last time? And is that still in position? It is. So it may come up here, and again, this time it came up, but when it came up first, it came up really, really fast and a strong volume. So we're here, it's a bit more systematic. So we'll see. Here's 3 hour. Again, 3 hours after breaking the 144 and the 100. That's not so good. Don't really want to see that too much. But then again, you got to look and go, well, what timeline is in charge of this action? So you can see the 3 hours pushing. Look, here's the 2 hour pushing, moving away from the VWAP a little bit, but not too far. So this, you can see where the push is coming from. Yeah, here's the 200. Look, a firm rejection from the 200. Here it is, looking like it wants to test it again. Here's the 1 hour. Again, coming up to the Bollinger and the green line. So you got to think as well. It's like you can go, oh my god, what's going on? Look, it's at the top. It's at the peak of an Elliott wave, and it's coming to a really strong channel line. So like we can get anxious about this, but you go, where do you think it's going to go? Because it's at the top of an Elliott wave. It's hitting this line that it's got strongly rejected from. There's a bunch of MAs that are rejecting it. Is where does this think it's going to go? Like where past that can it go? You know. So I'm just looking here. Now this is I put this in now. I think this is the 800 MA. I see some guys are using the 800. I wouldn't normally use this, but I started putting it in, and you can see on the 30 minute, it was the 800 that hit there. Here's the 15. You see, this is where we start looking for, where's the turn? If it hasn't turned, is it close to turning? So here, look at the MAs here. Here's a turn here. Look at this, working back up again. Is it working its way back down? Well, at the moment, there's a local high here with a bit of rejection. And then here's on the 15. The 15 is a red candle here. Is this looking like it's going to turn? You know, because this is the tip of the spear. Think about, we came from the day. We're now down on 15 minutes. So this is the tip of the spear, so to speak. So we're looking at the 10 minute. What's the 10 minute saying? Okay. So it's in position that the 5 could cut through. And again, it retraces back down. And then look at this. Look at this. Right at the precipice of the 5 minute is here we have this, and is this our turn? This is what we're looking for. And this is the value of the 5 minute, is for all the big moves and for all the pushing and pulling, is that at one point there is a turn, and you will see that turn happen first on the 5 minute. So this turn here is what turned the rest. Is Now there's still price action pushing up. This turn here, I suspect if we're doing a 1, 2, and then 3, this is the turn that could be the turn that sends it all the way down. And you're seeing it first on the 5 minute. So if you're looking at the bigger time frames and you're going, what's happening? Oh my God, look at this, look at this, look at this. Is if you go to the 5 minute, you go, yeah, but in the 5 minute, does this look like it's ready to turn? The RSI was high, it peaked, and now it's looking like it's starting to head down, and it has space to move into. Now, it doesn't take very long for the 5 minute to get down here, but it's still in a position where it's able to turn and get down. So it can pull away from the edge, and you get a cascade. The 5 will break the 3, or the 5 will break the 10, and the 20. You'll get a little retrace here, and then it'll work down. And while the 5 is spilling, you'll see the 10, the 5 and the 10 turn as well, and you'll see a gradual cascade where they'll incrementally. Here's the 15. They'll work through, and once you start to see the 20 break, so if you see the 20 break on the 5, you see the 20 break on the 10, you see the 20 break on the 15, is you're already into the beginning of the spill. So that's you looking at the tip of the spear, and you see the spill, you see it turning over. So you can see the RSI here on the 15 is taking a nice sharp turn down here. It's 9:35, so we're halfway through the hour. If we see this on the half hour, oh, there we go, half hour. So this is a really good indication, because look, we're halfway through the hour, and there's the spike up. Now here's the 30 minute has decided to go red. Will it stay red? You know, sometimes it doesn't, but oftentimes it does. But it's a good indication that if the 30 minute has turned, is the hour will turn next. Jesus, the hour might even turn while we're sitting here looking at it. Look how much of a retrace is on that. So it definitely looks like well, I'm gonna catch myself now, because this can be up and down in the next half hour. But the potential for it to turn red is pretty strong. It's pretty strong. It looks like it might. So that's it. So, but again, I'm getting a little bit off the track. But you can see what's the play of it, and it stops you. It stops you getting too stressed out when you start looking at things moving, and look when it gets tight and it's turning. Like this is tight and it's turning. It's threatening to do two things: break out and keep going, or oh my God, is it going to turn down? It can be a very anxious place to be in a trade. So it's good that you can zone in and look at what's happening on those smaller time frames to recognize the bigger turn. And I think that's again back to the conversation about a position of strength. Psychologically now, is this information here, as well as looking at the bigger time frames, psychologically puts you in a position of strength. Is you can see what's happening, you can read it, and then you can see it positioning itself. So look at all these moving averages getting pulled up here. All these moving averages are getting pulled up. They're getting pulled away from the resistance. See the resistance here? There's a lot of resistance here. It's getting pulled away from that. It's getting pulled up. It's shaking them out. So that when it does turn, all these guys now have space to turn around and add a bit of force, add a bit of momentum to the downturn. Now, while that happens, these higher time frames that we were looking at, are now coming into play. The 50 here, if it wants to, the 55 EMA, the 20s here, these are now involved in the next push down. They were too far away, but now they're involved. The lower time frames on the daily and the 12-hour are involved. So what's happening is the confluence of this lift up is pulling up all the moving averages on the timeline. So now it's connecting the lower time moving averages with the higher time moving averages that were higher, like the 20s here. Oh, sorry. The 20s here on the daily, the 20s on the 12 hour. They're now coming into play. The 20s, the 50s on the 8 hour are now in play. The 50s on the 6 hour and the 144 and the 100 on the 4 hour. It'll be the 200 when we go earlier. Oh, look, there's the 4 hour going red. So now all these higher timelines and their moving averages are here. Now on the lower time frame, all the moving averages on the lower time frame are getting pulled up to meet them. So now here's the lower time frame coming up to meet the higher time frame moving averages. Now they're all together in the one space. Look, there's this push and pull. Why is it taking so long for it to turn down? Because they're all consolidating in this space. So as they consolidate in this space, they can all move together. One final push. And I think that's what we're looking at. One final push down. And this will be the bounce that takes more and more the moving averages on all the time frames into the one position, and then it can up from there. So I think that's what's happening. This is the final push for the new pump. That's what it seems like to me, yeah. So position wise is, and I suppose I'll just tell you my trade from the start. I started this up at 103. This is when I started this, is looking to get in on around the 103, and then follow it down. So I've doggedly stuck with it, following it down. I was actually in earlier, to be honest. I was in earlier. I was in.
Talk about a position of power.
Yeah, exactly. Now I got in around here. I got in around here because I'm thinking, okay, we're looking good here, and and then it's like, okay, great. I was in profit. Okay, great. Oh, what the F it was putting me in red a little bit here, and because I knew it was coming down, I said, no, I'm going to stick with this. So I put my liquidation price up. I put money in the margin, and I put it well up. I put it so far up, it was never ever going to get there. So then I relaxed and I let this play out. Okay, now it's starting to come down again. That's when I started the dollar cost in. I dollar costed in here when it was going up to pull my position up, and when it started going down here, I started to dollar cost in. So now I'm dollar costing in, and my position went from what was it here? I think my original position was around 93. And then I got it pulled up to about 98 because as it was on up here, I dollar costed in, got it up to about 98. My liquidation was way up here. So when it started to come down again, I was like, okay, I went into the green faster. And then when it started to drop, I started to dollar cost on the way down. And then it pulled my position down. My entry point now is at 84 and a half. I have two trades in, yeah. So they're my entry points. And again, my liquidation price is back up somewhere in the 90s, yeah. So I'm sitting here just waiting for it to go. And then it came down here. It's like, okay, hitting the 80, great. And then when it dropped in here, I put dollar costed in more. It dropped down, and then that's where I dollar costed into 83 and a half. And I said, okay, hold it here now. I'll hold it here and I'll wait. I'm waiting for it to drop, to break this red line here. I'm waiting for it to drop before I dollar cost back in for that final leg down. So I've been waiting, and there's all this here, and I'm looking at you guys doing all these swing trades, and I'm going, geez, I could be doing all that swing trading. But I'm holding my position because I'm just disciplining myself with this longer trade. Excuse me. So doing this here, great. Retrace up here. Okay, I'm going, okay. That's not so good. Coming back up here, that's not so good. And then I had to remind myself of this, that Crypto Clear and I talked about this weeks ago. Weeks ago we talked about this. I'm bringing this in here now so you can bring this in. Can everybody see? Can everybody see my 4-hour blue chart?
Yeah.
Okay, so I think if I can do this, it'll get rid of everything. There we go. There we go. So now I can't put indicators. I can't put any trend lines in this now because I can either clear them. But look at the Elliott wave. This is final peak on the 4-hour, but it's also an Elliott wave. 1, 2, and when it hit here, we were going, look, this looks like the W. This looks like 3. So we were here. This looks like 3. What needs to happen is we need to see the scoops. Before this even happened, we need to see the scoops. Because if this is 3, it's going to begin to scoop. And then look, it's done the 3 scoops. Okay, so now this isn't 3 because this scoop got below it. So look, it did the scoops. Okay, now here is, and we were looking at this going, is this 5? We had a little bit of a panic here. Is this 5, 3, 4, 5? I was like, going, hang on, look, these are just the scoops, and there's 3 of them. So now, from here, now we're going to 4. So 3, 4, and then 5. So now you can see here it's reasonable for it to go here. It could go all the way to the peak here, 83.63. I'm mindful that it could. I didn't think it would. I thought there was a resistance line here at this one here at it was like 70, I think 79 something, 78 something. I thought it would hit off that as a limit, which it has, spiked through it. And you can see that the middle candle here got rejected by it again, and now there's another spike through. So this is where I thought the limit would be. Is this spike through is bigger than I thought, but 81.50, I'll take that, you know. So now this coming back down is 4 coming down to 5. So now the question is, how far is it going to go? So definitely it's going to go to 69, and it's definitely going to go a couple of points at least past 69. Now if you look at this, it is this big movement here. So it's hard to imagine that this 4, look at the size of it, and then when 5 comes down, it's 69, and then it just goes to 67 or 68. I can see TA to 67 or 68, but it just seems like 65 seems very reasonable. 65 seems very, very reasonable. 60, to be honest, sounds reasonable. 55 actually sounds reasonable. All those targets seem very, very reasonable. The center trend line down here is again looking like 55 is a decent target. But to be conservative is 69 is, even if I put my target at 67, 65 is I'm in enormous profit there. When I finally get my take profit here, I'd like to show you what it is. And the reason why I'm doing that is because the value of doing a trade like this and what is it worth, and trading from a position of strength. Now, because I'm going through this and I'm being dogged with it, we have been doing an awful lot of late nights. Is long term, it's not sustainable to do it with the lack of sleep that we've had. But this is because we are sitting on this, gathering information, learning, putting ourselves in the pocket and staying in the pocket of this all the way through. And it's been brilliant to do it. I won't need to do it all the time. Next time I do it, it will be with a lot more sleeps in it. But we have been sitting on this 24/7 all the way through. To break the back of it, and what I mean by that is break the back of it in our own minds, is to be intimately involved with the trade all the way through. Now, talk about position of strength. We have in our lives put ourselves in a position of strength to do that. The last time I was able to do anything like this, I spent 4 years in my bedroom in my early 20s doing yoga. And I had a little business that was selling car registration plates. And I had to do 2 trips a week. 1 to deliver stock, and then 2 is to collect the money at the end of the week. And then the rest of the week was my own. and I spend 4 years in my bedroom just doing lots and lots of yoga, and all my time is free just to do that. So I could learn in the most natural way uh, that worked for me. So I've given myself the same position of strength by going full-time trading. There's nothing else that is pulling at my time, so that if I want to do an all-nighter and be wrecked for a few days and just do trading, then I'll do it. And I'll be really honest with you, is sometimes it's hard to get a bloody shower. It's because it's like I'm so in it, if you get what I mean. But I've put myself in that position because I'm playing the long game. I am the tortoise in the marathon. I'm not the hare in the race. And the reason why I'm doing that is because I looked at trading. And I also realized 90% of the people pay the other 10% of the people their profits. That's the simplicity of it. And I'm not even sure whether 90% is accurate or 10% is accurate, but it's a good metaphor. Is why do only 1 in 10 people really make it at this? It's a question to be asked. Then if you ask yourself, out of those successful people, within the time frame of trades, when you have everything from scalping to long-term trades that can last for weeks and months, to day trading where you open your trades on the day, you close them on the day, to intraday trading where you're trading over your trades in for a day or two or a few days, but not weeks. That's generally the scale, so to speak. Scalping in its truest form is in and out. A scalper could do 30 trades a day, and the trades are lasting minutes, in and out, in and out, in and out. Matt and I, the one we were talking about this earlier on, if you're in a trade that's gone on for 3 or 4 hours, 5 hours, that's not a scalp. That's a day trade. So when you're working on the 5-minute arc, you're not really scalping. Is your day trading using the 5-minute and the 15. Is if you really want to scalp, you'd go down and you do the 1 minute or the 30-second arc, and you'd be in and out scalping. That's the way scalpers do it, yeah. So if you find that you're doing a trade a day, that's day trading. And again, a lot of people, day trading works for them because, again, think about your position of strength. Is some people love the scalping and the adrenaline, but of the 10% of people who really are successful at this, how many of that 10% are doing scalping? How many scalpers are there as a percentage of that 10 that are successfully doing that? And the answer to that is very, very few, because it's intense. I know you can go, look, I can get in, I can do this for 2 hours and make my money. You can, but it's an intense form of trading, and it is high risk. Is you're getting in, your stop losses are tight. Is the whole idea with scalping is that you just win enough. You win enough to make more money than you lose. So when you're scalping like that, you're always there's a high capacity of lost trades. So you have to have the mental fortitude to be able to lose as many trades as you're winning, and then to tip the scales and win more trades than you're losing. So mentally, it's very challenging to be in that battle, where it really is. Sometimes you're down 3, you got to pull it back. It's a stressful form of trading. So very few people, and again, long term. This is what I'm saying to you, is that it might work for some people for a little while, but it won't work for a long while. There are very few long-term scalpers that are very successful, because it's very stressful. You need to have a certain constitution to be able to maintain that, yeah? So there's that. Then another position of strength for some people is they day trade. Is that I've only got today. I've only got these hours today, and I want to get my trades open, and I want to close them by the end of the day, and every day is a new day. There are a level of people who trade there and trade there very successfully. there would be a very good portion of that 10% would be day traders. Excuse me. A very good portion of those would be day traders, and you can work up your trades to be substantial in that. So you can be doing very big day trades with a lot of money. But I think the majority don't. I think the majority of day traders they view it as I'll make a little bit and I'll keep making a little bit every day, and compounding adds up and it makes a huge difference. So there'd be a lot of people like that. Again, the challenge with that is the long term, is that also has its own intensity, where you're in it every day and you could be going into one trade, you could be going into two or three trades. Is it has its own intensity where you need to be in a position of strength within yourself with regards your routine. Is have you allocated the time and energy to maintain that, not just for a little bit, but for something more considerable. Weeks, months, years. Again, if you want to be a full-time trader, is if you're going to be a part-time trader, is that would work also. Is doing the day trades would work also. I think where it becomes challenging is if you're a day trader but you only have 3 hours available. So if you're day trading, you only have 3 hours available, is you're going into trades and you don't have the time to get in and out. So you can be incentivized to be doing smaller trades and getting in and out over the hour or two, which again is back to moving closer and closer to scalping. But when you trade on the smaller time frames, they're more volatile. Is you are more likely to get caught. So that's why that can burn people out, because it's psychologically defeating when you're going into trades and getting knocked out regularly. Even if you've got your stop loss in and you've protected yourself, so your loss is not very substantial. It's the psychological loss all the time can get the better of people. And if you have a couple of losses, then you're trying to get into the win column again. It gets very stressful, and everybody goes through this. This is part of the baptism of fire. Is doesn't matter how great your TA your TA that you learn now and you're working now. You find it works for you right now. Brilliant. Look at what happens when a bit of volume comes in. Is you get thrown off. So now your TA has to adapt, and now when we come into the bull run and the pump will be up, now you got to be careful with your shorts, because your shorts aren't going to meet their targets, and most likely the bulls are probably going to break the targets that you're used to setting. You have to adapt again. So it takes time in the market for you to, whatever position you put yourself in, is going to take time in the market for you to establish yourself in that. So psychologically, is all those wins and losses, they stack up. Never mind financially, psychologically they'll stack up. But financially, they also stack up. So now, partly your position of strength may be you need to pull back on the amount of money you're putting in. Again, I lost thousands. I ended up, what really broke it for me was when I went down to trade $10. Because I just got to a point where I was like, well, if you can't be consistent in $10, is you're effing stupid to be trading anything more than that. Because I just needed to bring everything together. So I needed to just let myself be free to trade freely and take the pressure off me. That was me moving to a position of strength. Did it at one point look like I'm moving backwards? Outside it might, but where I was, no, this is actually what cracked the nut for me. So you got to think about your position of strength is not just about a trade. It's your trading strategy. It's your own mindset, and playing from that place and not getting pulled into the fear and greed. Equally is in your own routine, your own lifestyle, is trading from a position of strength. You might have everything else right, but if you walk into your trade stressed out with 10 other things on your mind, is those 10 other things are going to interfere with the clarity of your trading. So the position of strength is very, it's a layered experience. There's many layers to it. And you gotta just be mindful of them. So now you're day trading, or you're trading on the 5 minute and the 15, is I think everybody's got to cut their teeth and do that. So as a starting point, I think it's excellent. Some people might go, look, this day trading works for me. This actually is my position of strength. Great. Well then, work it. And you can work up from, again, the example for me, the metaphor is $10, $100, $1,000. Once you've got consistency. Now, consistency is confluence of all your positions of strength. Whatever your commitments are in your life, you're able to give over the time required to trade the one that works best for you. So if you're a day trader, is you need to be able to have that time available to do it. Is if it's 3 hours, then you need to trade within those 3 hours successfully. So you got to pull your timeline. You're moving into a lower timeline. Problem with that is that those lower timelines are not as stable. They flicker. I think Matt said it on his video yesterday, is that you look at the 4 hour, it's very stable, goes sideways on the 4 hour. If you go into the 5 minute, it's up and down like a ping pong within that same timeline. So trading on the 4 hour gives you a much more solid movement of the pattern you can rely on than the 5 minute. So that's where, if your window of time is shorter, is you're moving into a more volatile space to trade. And again, that's where the confluence of, do you have enough time to trade the way that psychologically works best for you? I'm going to say that again. Do you have enough time to focus on the way that you need to trade that psychologically works best for you? And a simple example there is, I only have 2 hours a day, so it looks like I'm a scalper. Okay? Then psychologically, is scalping your best position? Will that work best for you? Does your nature facilitate that? Do you like the high intensity? Do you like the risk? Can you take the pressure of having lots of losses within your wins? And not be defeated when you lose 3 in a row, and you're like, okay, now you're on a slippery slope of chasing. Because even if you're a scalper scalping the 1 minute, you have to allow the trade price action to come to you. If price action is not coming to you, you are not prepared. It's really that, and you can hear the tone in that. I'm talking to myself there. This is my little conversation I have with myself repeatedly over and over and over. Is that if price action isn't coming to me, I'm not prepared. Because if I can see price action coming to me, I'm prepared. I have my strategy set up. I know my entry point. I know my target. I know my dollar costing in. If it goes beyond the point I'm looking at, I can see a backup point. It's like, the simple example is this the blow off top? Maybe it will go a little further. Well, I have my strategy in place there. I have my dollar costing in. I know how much I'll put in. I know when I'll put it in. I have it all in place. I'm ready. So that when price action comes to me, I'm ready to go. Psychologically ready, strategically ready. I can act and I can move with that as it moves. That's trading from a position of strength, and it's coming to you. Is if you find yourself chasing the trade, wanting to get into a trade, looking at it, is this the position? Will I go in here? Waiting for it to hit a point and go, okay, I'll go in now. Is you're chasing. And generally that happens when, if you get a stop loss out, is you get it once, you want to go back in, you start looking for position, is we can end up chasing it. So now this is us losing our position of strength, and we're chasing the game. So now you can be chasing that in a trade, but equally in your schedule, your daily schedule, is whatever amount of time that you can put aside, are you chasing those hours? You've got a busy life, you're trying to fit your trading in, and you're chasing after those hours because the rest of your life is really busy, that's chasing too, as opposed to, here's my hours, I'm prepared in my TA, I'm prepared in my trading, so that when I sit down for these 2 hours, 3 hours, 8 hours, whatever it is, I'm prepared and I'm ready, and I'm going to play from a position of strength. And 90% of what we do is TA, 10% is trading. So you may find that if you've got 3 hours, you may find that there isn't a trade for you in those 3 hours, not from a position of strength. You may find that on an 8 hour, you got to wait 6 hours before you get your trade that is a position of strength. I'm just giving examples. And that you hold the line of your position of strength. And that's a real discipline. And the reason being, because you are holding the line of consistency. Is if you keep moving away from your position of strength, you become erratic and you start breaking the rules you set, and you will lose your consistency and you're chasing. Everybody does it. Is everybody, this is part of the discipline and the challenge of it and the thrill of the trade and jumping in and out and making some money, losing some money. It all gets very exciting. But when you look at it and go, okay, we've got to play the long game here, is then the discipline has to move into another level. And you're not going to have that straight away because it's a new thing. There's so much going on. You got to deal with this. You got to deal with that. Is that this process it's part of an incremental journey. So now I'm looking at some people getting stop lossed out. The volumes come in. The environment has changed again. And it's like, okay, it's a good time to have this conversation about, look at what you learned, is look at your position in many ways and go, where's your best position of strength? So now let's just go through it again. In your life, in your responsibilities, they're all, think about, just hold them all in your mind, yeah? Just be aware of them, yeah? So now you want to do trading. You've been putting your time into trading. Is it enough time? Do you need more time? Is there a way that you can manage that time better in the sense of your responsibilities? Is there ways that you can move things around so that you're freeing up your time more? In two ways. One is maybe the length of time that you have, and you may shorten it rather than lengthen it, depending on what is real for you, what's realistic for you. And then even more important is when you come into that time zone, when you are trading, is that you come into it and just focus on trading. That the more you can put down the other things, that you're not carrying them in with you, you'll be a better trader. You'll be clearer. You're maximizing your position there. If you're coming in and you're carrying other responsibilities and they're distracting you, that is not going to work. For any person, that is not going to work. Because if you allow that to continue, you'll make mistakes. You'll get caught. And then you'll revenge trade. You'll go back in and then you start chasing. And then you get frustrated, and you're adding to the complexity of what's going on rather than reducing it. And the whole idea here for all of us is to benefit our lives, is in whatever form that is to benefit it. So can you come to your trading feeling less of the burden of carrying your other responsibilities in your life? Can you put them at the door? Can you leave them at the door, so to speak, and come in, and when you're trading, it's the only thing you're doing? Is that may be relevant for you. And then are there conversations that you need to have with people or modify other agreements or responsibilities you have so that you're not bringing them into your trading space? And you all know what I'm talking about here. We all have our stories with it, yeah. So just be aware that is a big part of you being able to sit and clear your own space in your life, clear the time, but then also clear your mind, clutter, get all that out. So your best indicator is your head. You want to get that as clear as you can for your trade. So there's one position of strength. Now, two is you've got a bit of experience, is starting to look at, how is it working for you? Are the 5 minute and the 15 minutes working? Are you enjoying it? Are you learning a lot? I'm hoping you're all going to say yes. There's highs and lows in it, absolutely. And then one of the questions is as you go along, does it work for you to do the smaller trading where you're in for minutes, or you're in for a few hours, or you're in for a day? If that's working for you, then keep refining it. Yeah. What are the other options? Where do the people who are most successful in this, what level do they trade at timeline wise? Where do most people trading do most of their trading? And the simple answer there is on the 1 hour and the 4 hour. You ask Carl and from the Moon, you ask Crypto, you ask any of the influencers, what is your main timeline that you trade on? They'll all tell you the 1 hour and the 4 hour. They look to the shorter time frames to see the moment of the trade. They look to the weeklies and the dailies to see the greater trends, but they will trade on the 1 hour and the 4 hour. And the question is, why? For consistency. Because when you see a W on the 15 minute, it isn't as solid as a W on an hour. And an hour isn't as solid as a W on a 4 hour. So they're looking for the consistency of the market. So the consistency of price action as you go into the later time frames becomes more reliable. It doesn't flicker as much. Now, understanding the arcs sort of changes that, to be honest, because you can use a 5 minute and a 15 minute and an hour arc, and that gives you confluence, and you can really work with that. So that changes the game. Most people don't understand that. The trading patterns. So trading a W on a 15 compared to an hour, the trust you'd have in one is far greater than the other. When you get confluence on the 4 hour, it's like, okay, that pattern is looking really solid. So that's what they're doing. So the 1 hour and the 4 hour, but what does trading on the 1 hour and the 4 hour mean? Well, it means that a trade will go on over a day. It might go on for 2 or 3 days. It could go on for a week. So when the traders who are trading on the 1 to 4 hour, they're generally trading on trades that last anything from a day to a week. And again, if you look at the influencers, because they're an easy example, they're a public example to see, is you'll hear Carl or you'll hear Crypto, they'll talk about the trade they're in, and then the next day they'll give you feedback on where it is, and they come out or they didn't come out or they're still in it, and so 3 days later, here I'm taking profit in this trade, or I'm taking a portion, I'm dollar costing in. You'll hear them talk it through, and their primary focus is on the day or the 1 hour and the 4 hour. So why is that? One is for the consistency. Two also is think about the long term of it. You're trading for, and I would suggest most people are going to come into this and go, I'm going to trade at least for 3 or 4 years. Why? Because that's a cycle. There's a cycle. So within that, there'll be the bear and the bull run, and you cut your teeth. A lot of people might come in, and like we're on the bull run. So a lot of people come in at this phase of it, they'll do this, they'll stay for the bear run, and then they'll stay for the next bull run, and by then, if somebody is successful, you are a multi-millionaire. Okay, and 1 in 10 is that works, and that's a phenomenal rate. So the promise is amazing. But now look, 4 years of this scalping, that is an intense experience. 4 years day trading, that will work, but again, it's in a small window, and some days you'll get your trades and some days you won't. You also got to be very conservative. And again, exit strategy is a perfect example. He trades, he wants all his trades done on a day, and look at how tight he is on his trades. So he wants absolute confirmation on the trade, and he will take his profit well in advance. So he keeps his window really, really tight, where he's just collecting profit lots and lots of times. But now he's military with it, if that makes sense. He's very, very disciplined. So you have to be that disciplined. So you can't be going in too early, and equally you can't be staying in for that extra bit of profit. Is if you want to be getting in on the day, in and out, is you want your window kept really tight. And that's what works for him. And he does it brilliantly. If that works for you, again, look at the position of strength. Look at the way that's being traded. So you gotta keep yourself very tight there with regards looking for confirmation, and then taking profit, not early, but taking profit when it's still well within the trading zone, and then that's the sweet spot. And again, you could be hitting that all day long, multiple times a day, and at the end of the day you're done, and that's what he wants. And he's nailed it, and he's absolutely clear in it. So if that's your focus, then you need to focus on that. But now, think about doing that for 3 or 4 years. Is that also has its own intensity? Is for 3 or 4 years. So you need to be in a position to be able to hold that space over an extended period of time. And even for the first year and a half, is you're learning the environment. Volumes come in here, it's changed, so you got to adapt to that. So learning how to adapt to the changes in price action as it happens, that's just you have to go through the peak and troughs, the bull trend, the bear trend, the transitions. Is you got to go through a number of those before you really start to understand how to traverse all the environment and not be getting caught when it changes over, which is a skill in itself. And you guys are now getting into that, because we're in a transition, it's going to change, and then the conversation is going to change, the energy is going to change. When the pump comes in, there's going to be a lot of money moving. So, okay, something's after closing there. Sorry for 1 second. For some reason my
Yeah, you closed the stream.
No, I didn't close the stream.
Well, the stream is closed.
It dropped.
Yeah.
It dropped. Okay. I just wonder what happened there. There you go. Guys, can you hear me?
Yeah, the mic is still on.
Yeah, we can hear you.
Okay. I think my internet might have dropped for a moment there. I think, or something. I don't know. Okay, we're back in.
Yeah, your stream dropped.
Yeah. I think maybe something with my computer happened, because my page dropped as well for some reason, oddly. Okay, so the point. There we go. So the point I'm trying to make is, you can see, and I'm using extra strategy as an example. He is really, really tight he knows his routine. He knows the time he has to put in. He's in a brilliant position with regards to his job, and he can sit there and he can trade while he's doing. So he's trading, and he's also earning his regular job, and he can maintain the quality of his regular job while he's also trading, because of the nature of it. So it's a brilliant position. So now his best position is that. It's excellent. And he can trade in that zone, so that when he goes home, he's got his family, he's got his kids, and the trading doesn't get pulled into that. So he's nailed it, if that makes sense. So he can go, I can do this for years, and he's got his own plan over a number of years, and he's pacing himself. So he has no problem waiting for confirmation, taking profit a little bit early, so that's nice and clean, because he knows he can do that over and over and over, day after day, week after week, year after year, and he has that clear in his mind. And he is pacing himself. And it's stress-free for him, in the sense that he can go home, it's all done. And he's avoiding getting into the conflicts of, chasing a trade or staying in too long. So you can see his position of strength there across the board is nice and clear. So again, you need to look for that yourself. but you got to figure out where yours is and what works best for you. Excuse me. So now the reason why a lot of people will go to the hour and the 4 hour again is because of the price action moves slower. And when price action is moving slower, remember our position of strength, you can map out your TA, you can test all your indicators. So on the hour, when you go into a trade on the hour, you are ready for that trade. And you have all your TA there and you have all the time you need to prepare yourself. So when you go in, is that you can trade in a position that once you go in, your trade is in, it moves away. Now price action is away from your entry point, is now that you can just let that trade do its thing. Once it moves away enough, you drop your stop loss in at your entry point. Now you're protecting the risk. So you won't take a loss except for maybe a little bit of interest. So now you're in a good position and price action is moved away. And then you can let that price action do its thing and you're monitoring it and you're TAing it as you go along and you're looking to see how it's playing out. And if it's playing out the way you want, again, you can be dollar costing in, you can be taking profits as you are, and it's over a slower rate. So this may happen over a day. This may happen over 2 days, 3 days. What happens when you go to bed? Well, you've got your stop loss in. Is you can move your stop loss to protect a certain amount of your profits. What's the risk? Well, I might turn around when I'm in bed, come back and knock me out. There you go. That's the risk. And you could get knocked out of trades like that. But what's the long-term benefit? Is that you're working your TA, you have all the time to figure out your TA. You're working at a slower rate. You're going in on bigger moves. And this is where the advantage is. One of the advantages is you're going in on a bigger move. So rather than going in on a 15-minute, is you're going in on an hour and the move is much bigger. So the percentage that you can earn on and then on your leverage is far greater. So as an example, so that's why that space is most people will levitate long term to the 1 hour and the 4 hour because it gives them that position of strength from the point of view of preparation, from the point of view of the mental psychology of it. You're putting in less trades, but you're putting in less trades from better positions. So you're swing trading higher swings essentially. So on a 15-minute, it's a small swing. On an hour, it's a bigger swing. On a 4 hour, it's an even bigger swing. So you're doing that, yeah. You can monitor it. You're spending more time doing TA and just nurturing your trade along, following it, rather than being in and out all the time. It's less stressful. Going in and out of trades all the time can be quite stressful. Is doing this is you're going into less. So you might only enter 2 or 3 trades a week, not a trade every day or 2 trades a day. You might only do 2 or 3, but they're substantial and they're being played out over a longer period of time, and you're mapping them out. And you got to sleep on these ones, so your stop loss becomes more important. But the pace of it is again, it's back to the marathon and managing the marathon of it all. Equally, there's that psychologically, that in and out all the time every day, and that has its own stress. Is feeling the pressure of having to get into your trade on the day. That has its own stress. You trade the hour and the 4 hour, you might look and go, the trade isn't there on Monday. Is the trade, I see this trade coming. This looks like it's going to be Tuesday morning before this trade is ready to happen. So you're preparing yourself for the trade in and around Tuesday morning because you can see it's going to land then, and you're prepared for it. And then that trade might go on for 3 days. And you might see another one that's going to come in Tuesday evening or Wednesday afternoon. You go, okay, I'll pop into that one, and then you're mapping that out. So it's a different pace, but again, you got to build up to that. I think it would be very difficult for somebody to come in and start trading the 1 hour and the 4 hour straight away, because again, it's a slower pace. You don't learn as much. It takes much longer to learn because things are moving slower. So trading on the 5 and 15, you've got that turnover of price action. You've got that turnover of the pattern. It lets you get in and use all the indicators, and it accelerates your learning and your growth. I think everybody's like an incubator. Everybody, I think, should start there and spend a good amount of time there. 3 to 6 months is a really good time to spend there. But then you're going to find that does this long-term facilitate you? If it does, you need to get all your positions of strength correct. What does that mean, Roy? It means consistency. Consistency. That's the key. You need to be consistent. And then in that, consistently winning. Everybody gets caught at times, but you win. The odd time you get caught. No, psychologically, that's grand. Everybody can manage that. Sure, can manage that for years. It's a win. So now that's, if you're going to stay there, you need to be tightening up your game with regards your positions of strength. And you can't be getting caught up in the excitement of it and then chasing it and getting caught up in the cut and thrust of it, which is all very exciting. But again, at one point you gotta maybe pull back a little bit from that and go, okay, I need to watch here a little bit more. Something new has come in. I need to pay attention to this. And that can be frustrating. And what I mean by that is that volume has come in here. You got knocked out a couple of times. Volume has come in. You've lost position. You're looking for your new position. But you're looking for a new position while things have changed. So, and I found this is that and this happened to me with one of the bull trends. I got wrecked in the transition. Mentally wrecked, financially wrecked, emotionally wrecked, whatever amount of wrecks you can think of. And then the bull trend happened, and it kicked off, and I got caught. I got caught at the beginning of it, and it just melted my head. And there was this beautiful trend that lasted about 3 or 4 weeks, and I just couldn't get into it. It was killing me, and I was chasing for the whole second time. Now I learned a lot about the bull trend in that, but it was just such a ball breaker, because I was constantly on the back foot, because I got wrecked in the transitions. I was totally unprepared for when it went up, and yeah, that was tough. That was a tough time, because it was the time to make money, and this was the time where I was floundering a little bit. So these are the things that happen. So you got to be minding yourself through this, which again is back to you're resetting yourself and looking at where are your positions of strength, time wise, responsibilities in your life, psychologically, what's the best way, what is your best trader, what way is the best way for you to trade. And I know you're feeling it out, but now is a good time to start thinking about it. And one of the challenges is, if you go, okay, you like the 5 and 15, keep going, is keep refining it, get your consistency. If you find that after a while, it's like, okay, I've got it now, but I'd like to trade at a different pace, because the pace matters to me, is I'd like to trade bigger trades. So rather than loading up a lot of money into a 15-minute trade and it being risky, is I would rather put more money into a more consistent trade, which means going up the timeline. You're going to have a problem, is having to wean yourself off looking at the 5-minute and the 15 is a real challenge. It took me a couple of months, and the first month was very frustrating, because it's just, you just keep relying back on what you're comfortable with. So I kept coming back into the 15 and looking at it. And when you're looking at the 15, it's all shorter time frames. And then you try to look at the hour, and then you start to try and manage the hour and trade the hour. So a small little thing that would happen on the hour it's a big thing on the 15. So you get this big reaction, because on the 15 that's a big move, and you're like, oh my god, that's a big move. But then on the hour, it's like, no, it's not a big move. That's a portion, it's a move within a bigger move. But on the 15, it's like, oh my God, that's a big move. So, and we get pulled back into measuring the hour by the state of mind and the measurements of the 15. It is really hard to pull ourselves out of that. So first month of that, I was back and forward, and then I realized, what do I need to do here? I need to stop looking at the 15. I forced myself to stop looking at the 15. I'll only look at the hour and the 4 hour. Don't look at the 15. And then I did that for about a week or two until I really started to see the pacing of the hour. Got used to the pacing of the hour. That was the trick. I had to get used to the pace of the hour and not keep reading into it. Oh, it's this, oh, it's that. No, I have to let it, again, I have to let it show itself. It has to come to me rather than me chasing it. So then when I got comfortable with that, then I could start looking at the 15 and not be getting pulled into seeing everything through the prism of the 15 minute. I could differentiate between the 15, the hour, and then the 4 hour. And I find the 4 hour very calming. It takes time. I found it frustrating at the start because like, oh, it's taking so long. But once you start to see the swing trades on the 4 hour, I get very excited because I'm like, oh, look at this. And you look back at the swing trades in the 4 hour and you go, God, if I got in there and I went all the way down there like it keeps doing, that would be amazing. So now I'm on the trading the hour and the 4 hour, but it takes its transition and its pacing. Excuse me. So this is why I'm building up my stamina. So now I'm in this trade for weeks now. I'm been at it, and this is my simple logic to it. If I can do this trade as going on for a month, and I've been in it for the month, solidly and intimately following the whole trade, looking at the hour, looking at the 4 hour, looking at the daily, looking at the weekly, is really absorbing into that, really just letting it just soak into me. Think how easy it is for me to trade a 3-day trade or a week trade because I've got the stamina to do it for a month. So I've got the stamina to do it for a month. Then doing a 3-day trade or a month or a week trade, it's easy. So that's really my own approach to it. So that now when this trade is done, I won't be doing it this way next time. When the bull trend comes in, I'll go follow the hour and the 4 hour, and I'll be in and out of trades that are 3 days, 5 days long, and I'll work it that way. So that's me breaking the back of the hour and more specifically the 4 hour. This is my way of doing this. But again, I have facilitated myself. I had to sell my old business, so it's not there. Let go of all those responsibilities so that I could actually do this and do it fast, because that's what I wanted. You could do this over a much longer period of time, and that's fine. But I thought, no, I want to crack this, and I want to crack it sooner rather than later. So I want to live in the pocket of the 4 hour trade. And again, if it's going to go long, I will stay with it, and I'm going to stay with it all the way. So that's personally what I'm doing. But I've put myself in that position to do that. And then that's where I like the intensity of that as well. But everybody's got to find their own way. So now, where is this leaving you? Or where is this going? I'll give you an example. My trading is again from $10 going up, $50, $100, $1,000, $10,000. The trades I'm in now are leveraged up to 208,000. So I'm already in the 6-digit trading now with these trades. That is very different than $10, and I'm trading on the hour and the 4 hour. So it is substantial. Say again?
This is good. I said we always wanted to know this. It's good, because by seeing people that are actually successful at it, it encourages the students.
Yeah, well, yeah, absolutely. Well, you can see why I'm sort of explaining the process and the journey and the pattern, and everybody picks their own level, everybody picks their own pace. So everybody has their own. So you're in that feeling out process. So I think it's
But we also realize the risk because, like with Matt yesterday, he was explaining risk management.
yeah
And to me, I'm telling all my friends and family, the biggest thing is risk, to really learn about all the risks so that you avoid these
uh,
pitfalls. So hearing your past
yeah
is actually helping us understand the risk.
yeah absolutely yeah totally. There is a real journey in the story, and we're all on it. We're all on it. Dollar costing in with regards to position of strength, one of the most important things from a position of strength is dollar costing in. That also changed the game for me because I dollar costed in and it was a grand or two, But then as it went down on my 4 hour, because I'm in a long trade, as it went down and it moved away from my entry point, I had absolute confidence to put in a couple of more. So that 208,000 didn't go in all at once. That was an incremental, gradual thing, And I'm in a very good position. Excuse me. And the question for me is I've got brilliant profit now. Like I'm just in a question of how great is it going to be. Like it's that's the position I'm in. So it is an amazing win for me. Um, but again, it's true. Again, finding your position of strength and adapting yourself across the board in whatever way you need to find that. You're all in that feeling out process. So there's stages to it. So one of the things that's happening for you now is the market's going to change, and whatever was working for you is, don't be surprised if it doesn't work for you as well, because volume is in. Okay, now volume is going to really kick in and we're going to start going up. So you're now going to go on the learning curve of now trading in the bull market. So that's all exciting, but it's different. So you just have to be just mindful of not being overconfident, because it worked for a little bit, which again I did a bunch of times, and that when it changes, is you got to be a little bit more cautious, even though it's the bull run. There's more money going to be made here, but you got to be cautious the way you move into it, because you're only moving into that space, and you got to feel it out a little bit. So yeah, so the hour and the 4 hour is most successful traders. That's where they're trading. And equally, it's that beautiful sweet spot between, you want to trade more money. You want your trades to be more valuable, and that's the sweet spot where, you could do legendary trades that run over months. You put a large amount of money in a slow, at the bottom of a 4-hour trend, you put a large amount of money in with a 2 or 3x, and then you just let it ride up for like 2 or 3 months. Crypto does them all the time. And he's turning $250,000 into a million profit, and that might happen every month or two for him. But he's like 4 or 5 of them in, and they're legendary trades. My intention is to do those. I'm going there. I'm going to be that guy, so to speak. So I know the position that I'm working myself up to. I can't do that straight away, because I've got to train myself up through the different timelines and be able to do it at the different levels. So now, my thought is that I'm doing these trades now. I do a couple of these 4 hour trades, trading the trend, big trends up and down. I only need to do two of these trades where I get 50 to 100,000 XRP, and I'm now in the legendary trade mode. I can be putting in a large amount of money at the bottom of a 4 hour on a 2 or 3x and letting it ride for a month or two. And so I'd say sometime next year, I'll be there. But I'm staging myself. I'm gradually doing it. So now I am where I am. So you can see why me staying in the pocket for this one is because I'm intimately learning this, so that when it comes to it, I can do those trades. But for the next 6 months or so, I will still trade the hour and the 4 hour. I'll dollar cost in, and I'll be looking to doing trades that last anything from 3 days to a week to maybe 2 weeks. I'd like to stay in that space for the next while, really settle into it. And then one trade will come along where I'll just see that sweet spot and I'll go, look, this is the one. I'll pull my excess down, I'll put more money in, and I'll plan this one there. I'm just going to sit on it for the next month or two. So that's me in my positioning. So now the question is with you guys is where on that scale do you see yourself? And just be mindful that, oh, that sounds amazing. Okay, that sounds amazing, but is that real for you? Does that work for you? Are you positioning everything you need to position to allow yourself to be able to trade like that? Or again, are you a day trader and I can trade in the small pocket, but I could do this for years and I could just keep that going, and that's your sweet spot. And you'll still get to the same end point of having a huge amount of coins compounding in price, and you can make an absolute fortune. Either way, whatever scale that works on you, as long as you can find consistency, you will hit the mark. And that's the 10% that succeed. The ones that find the level and pace and space and trading style that they can be consistent in, they're the 10%. So definitely there are some scalpers that are the 10%. The majority are the 1 and 4 hour. And then you have a minority that are legendary traders. Now I'm excluding institutions out of that, by the way. Like there's institutions that just work at a completely different, they do years. I'm not talking about them. I'm talking about the individual sole trader who is doing their own thing. So that's the general. I'm trying to give you a broad sense of the environment and the market and the positioning of different people in relating to trades and how to trade. So you need to begin to think about that and go, okay, explore what they are and have a look at them and get familiar with them. Get a feel for, is that real for me? Will that work for me? Like everybody might want to do the legendary trades, but not everybody's in a lifestyle to facilitate a legendary trade, or maybe you're too impatient. Maybe it just doesn't suit your nature. Sitting on a trade for a month or two is you just don't have the patience for it. Because you'll need patience, a lot of it. And if you don't have it, well then you need to go to your position of strength with patience, i.e. you need to adapt yourself to put yourself in that position of strength. Psychologically, get yourself ready for it. So if patience is your thing, and again, this is a part of, I want to move to the hour and the 4 hour, but I don't have the patience. Okay, well, your position of strength there is to take patience from where you do it really well and take that state and put it into your trading. And always, the simple example for me is if you were like a 2 or 3 year old child and they were trying to climb up a step and they were doing all that fumbly thing, and would you have the patience to be with them? And I'm assuming the answer is yes. Of course you would. And you'd nearly feel like it's privileged to be there to support them in that. And what you need to be, just be patient. So patience comes easy in that moment. Or your version of that metaphor, and whatever it is, the time when you have what seems like endless patience, or an easier way to say it is peaceful patience. Is you're patient and you're at peace with it. It's not a struggle. It's not like you're forcing yourself to be patient. It actually feels very natural. That's the type of patience that you want to bring into your trading. At whatever level you're at, that is the type of patience that you want to have in your trading. That's a position of strength, as an example. So think. You got to start thinking about these things, and just moving more into the layering and the depth of what it is to be a trader and a successful trader. And you'll find that a successful trader, generally the rules they set in their trading are the rules they live by. It's very simple. If you've really mastered dollar costing in your trading, most likely you will dollar cost into all your commitments in life. You'll make a commitment to it, but then what I'll do is I'll incrementally dollar cost in more. As it moves along, I step more and more into something. I don't just go all in, excuse my French, but balls deep, all in, all the way, and then that's it. Because that is not a strategically good thing to do in your trading. But generally, it's not a strategically good thing to do in life. Is incrementally let the life experience feel itself out, and let yourself live it more and more. And incrementally, you find yourself stepping into this, and then you find yourself fully immersed into whatever it is, whether it's a relationship, a new job, a hobby. Is you want to savor the experience of it happening, to live it, rather than just throw yourself in and struggle with the depth of it. You get what I'm trying to say? So just having those thoughts, just looking at what's working for you, what's not working for you, what's working for you. How do you make it work through all the different timelines or all the different environments? Okay, it worked for me now, but when volume comes in, do I need to adapt it a little bit? Is what's not working for you? Is how do you make it work for you? A simple example is, if you find yourself chasing trades, well, what's your solution? Is you gotta let price action come to you. So therefore, you gotta be willing to slow down and be more prepared, which means more TA and less eagerness to trade. So the more TA gives you the confidence to see the trade comes to you. There you go. That's what you work on. So just start to notice what's working for you and how to maintain it over the marathon. So there needs to be adapting. So you're going to run a marathon, is you'll pump your legs different at different points in the marathon. So sometimes you've got lots of energy, you'll go for it. Other times your energy is low and you reduce your effort and you coast. So you're still moving forward. You're still running, but you're adapting what you're doing to again keep moving forward, keep getting closer and closer to your goal, but you don't sprint the whole marathon because it's not realistic. So you got to stay adaptable with the things that are working. The things that are not working is you got to fill in the gaps. What is missing here, and how do I fill in that gap? And this is where I'm going to finish this conversation, and I'm going to put it back on you guys. Is again, what I'm saying is really valuable and is brilliant. Is the more you guys feedback, engage, is the more in the trading, in the chat, in these conversations, whatever it is, the more you can engage, the more feedback you can get. So if there's a hole in your game, communicate it so you can get the feedback. There's a whole team of people here. There's a wonderful community being built up. Look how supportive we all are. So if there's a hole in your game, share it so we can all tease out how to fill that gap. Because it won't be just for you, it'll be for everybody. So that's a win-win for all of us. If you find, again, look at how much is working for people. Everybody is sharing a lot as well. Keep doing it. But the conversation changes. This worked for me when we were going sideways in this channel. Now it's not working for me. What do I need to do to switch it up? Volumes come in and it's effed me up. How can I adapt what I'm doing to make this work? These are the developmental conversations that we need to see as we go along, so that we can keep the teasing it out. So really what I'm trying to say is keep doing what you're doing. Share as much as you can, and let's keep the journey going, and let's keep refining our positions of strength. That's the simplicity of it. Is one of the central themes of consistency is a position of strength. And from a yoga point of view, that's the center. You hold the center, you've got control of both sides. You hold one side, you don't control the center, and you don't control the other side. You control the center, you control both sides. Okay, so now that's our position of strength. So a simple example is those center lines that are the center line of price action. Now you see how important they are. So think about that. Is what is your best position of strength? And let this become part of our continual conversation all the time. Is every time you're learning something, is how can I apply this to my position of strength? All the time. What's my weakness? How can I adapt this so that it becomes a position of strength rather than a weakness. Okay? So thank you very much, guys. Yeah. Well, it'll roll on. I've noticed that as we keep teasing this stuff out, we can see the whole conversation rolling on. We can see the development rolling on. Can you imagine where we're all going to be in another month or two? The conversations we're having, the detail, the refinement. So lots to happen. Lots to happen. All right, guys. Enjoy the rest of your day.
Thank you, Roy. Have a great evening.